Hello, welcome to your daily dose of crypto news. I am the Northman. Always do your own research, like and subscribe for more content like this. Let's get into the article. Bitcoin briefly falls near $74,000 as thin liquidity keeps traders on edge. The bounce came as China factory data showed only mild growth, offering background support while dollar strength and thin exchange debt limit upside. What to know? Bitcoin briefly broke support before rebounding above $76,000 in a V-shaped move, underscoring how thin liquidity is amplifying both sell-offs and recoveries. The latest China manufacturing data offers modest macro stability, but given Beijing's tight control of the yuan and limited new stimulus acts, more as a background context than a direct catalyst for Bitcoin. With weakened trading thinning order books and sidelining major institutions, Bitcoin's price remains largely driven by leverage, positioning, and shallow market depth rather than by fundamental economic shifts. Bitcoin traded back above $76,000 after a short-lived break of support, where it tested $74,000, highlighting the fragile balance between deep buyers and forced sellers in a market still short on depth. The V-shaped move stemmed from order books dynamics where liquidity has dried, allowing buy-sell trades to have an outsized impact on the growing market rates. Crypto markets saw another wave of forced selling over the past 12 hours, with 510 million in leveraged positions wiped out. A lot of money. Long trades make up the bulk of losses at 391.6 million, reflecting crowded bullish positioning, while shorts accounted for 118.6 million. The imbalance points to continued pressure as prices slide into thin liquidity. Ether led losses among major tokens, sliding more than 8% in 24 hours, with BNB, XRP, and Solana also down between 4 to 6%. Lido staked Ether mirrored each drop, with Dogecoin and Tron posted smaller but steady declines as the risk appetite faces across large cap altcoins. This thin market depth allowed a relatively small wave of selling to break the $75,000 support and trigger leverage flushes, but equally shallow offers let deep buyers and short covering orders lift prices just as quickly. China, meanwhile, is providing context but not acceleration. A private manufacturing survey for January showed factory activity edging into slight expansion, while the official gauge slipped into contraction, underscoring uneven momentum in the world's second largest economy. Beijing's tightly managed yuan policy means the country's influence on Bitcoin runs less through direct capital flows and more through global dollar liquidity cycles. Interesting. Marginally better factory data can ease recession fears at the edges, but without a surge in currency volatility or stimulus-driven liquidity, it, in theory, acts more as a background stabilizer than a catalyst for crypto markets. The weakened trading window added another layer to Bitcoin's fragility, with traditional markets closed and large institutional desks largely inactive. Order books tend to thin further, reducing the amount of capital required to push prices through the key technical levels. In those conditions, Bitcoin often behaves less like a macro asset and more like a leveraged derivative of its own positioning, where funding imbalances and clustered stops orders can dictate the direction for hours at a time. For now, the rebound above the mid $70,000 suggests the sell-off functions more as a leveraged reset than a structural repricing. Depth remains thin relative to earlier in the cycle, indicating that both downside wicks and upside squeezes can extend farther than the fundamentals alone would justify. Until deeper liquidity returns or macroeconomic drivers such as dollar strength and real yields shifts more forcefully Bitcoin's price action, and that is likely to remain driven by positioning and market plumbing rather than by decisive economic data catalysts. And that was the article. It was written by Sam Reynolds and it's from CoinDesk. As I said, always remember to do your own research. I hope that you're having a wonderful day, and I will see you in the next video.